Hello, welcome to our finance channel. In today's video, I'm going to talk about a very important subject for your financial life, the impact of interest rates. First and foremost, it's important to understand what interest rates are. Simply put, they represent the amount charged for borrowing money. In other words, it's the price you pay to use someone else's money or financial institutions. Interest rates can affect your financial life in various ways, whether it be through loans, financing, investments, or even in your daily life. I'll explain each of these points in more detail. 1. Loans and financing. If you need to borrow money to buy a car, a house, or any other valuable asset, you will likely have to pay interest on that loan. Interest rates can vary widely depending on the financial institution and the type of loan or financing. Therefore, it's important to compare options and choose the one that's most suitable for your financial profile. Loans and financing are a common way to borrow money to acquire valuable assets like a house, car, or cover education expenses. When you request a loan, a financial institution, such as a bank, lends you money with the condition that you pay the total amount plus interest over an agreed period. Interest rates on loans can vary significantly depending on the type of loan and the financial institution. For example, interest rates for mortgages tend to be lower than rates for personal loans, which in turn tend to be lower than rates for credit cards. When you request a loan or financing, it's important to understand that the interest rate is one of the most important factors to consider. A lower interest rate means you'll pay less interest on the loan or financing over time, which can save you a lot of money. However, it's important to remember that lower interest rates may be associated with other conditions that may not be suitable for you. For example, a mortgage with a lower interest rate may require a larger down payment, which may not be an option for everyone. Before requesting a loan or financing, it's important to compare interest rates and other conditions offered by different financial institutions. Make sure you understand the interest rates and payment conditions, as well as any other fees associated with the loan or financing. Additionally, check if the loan or financing is suitable for your financial profile and if you'll be able to make payments within the agreed-upon time frame. Remember that the loan or financing can affect your financial life in the long term, so it's important to make an informed and responsible decision before requesting any type of loan. 2. Investments. Investing is a way to put your money to work for you and make it grow over time. There are several investment options available in the financial market, such as stocks, mutual funds, and various fixed income options. Each type of investment has its own characteristics and risks, and it is important to understand how each one works before investing your money. Interest rates are one of the main factors that affect investments. When interest rates are high, fixed income investments tend to be more attractive, as they offer a higher return with lower risk. On the other hand, when interest rates are low, variable income investments such as stocks and real estate investment trusts, REITs, may be more interesting, as they can offer a higher return despite the higher risk. Another important factor to consider is your investor profile. High-risk investments, such as stocks, may offer a higher return but also have a greater potential for losses. Lower-risk investments may offer a lower return, but they also have a lower risk of losses. Additionally, it is important to keep in mind your financial goals when investing your money. If you are investing for retirement, for example, it may be interesting to choose long-term investments, which tend to offer a higher return over time. If you are investing for a short-term goal, such as a trip or the purchase of a valuable item, it may be more interesting to choose short-term investments with lower risk. Finally, it is important to remember that investments are not a guarantee of profit and every investment involves some degree of risk. Therefore, it is important to understand each type of investment well before investing your money and always seek the guidance of a specialized professional. With proper guidance, investments can be a great way to achieve your financial goals and ensure a more stable future. 3. Daily life. Interest rates can also affect your daily life. For example, when you use your credit card or overdraft, you are also subject to interest rates. Therefore, it is important to use these resources with caution and only in emergency situations. In addition, changes in interest rates can also affect the prices of the products and services you consume in your daily life. This is because many business owners use loans and financing to keep their operations running, and therefore need to pass on these costs to the final price of their products or services. Therefore, if interest rates increase, it is likely that there will be an increase in the prices of the products and services you consume. Another important point is that interest rates can directly affect your financial planning, especially if you have debts that are subject to interest rate changes. For example, if you have a loan with a variable interest rate, it is important to be aware of changes in interest rates to adjust your financial planning and avoid the debt becoming a bigger problem. In summary, interest rates are present in various aspects of our financial life, from investments to the use of credit cards and the prices of the products we consume. Therefore, it is important to understand how they work and how they can affect our finances to make more informed decisions and plan our financial future more adequately. Now that you understand how interest rates can affect your financial life, I will give you some tips on how to deal with them. First, negotiate loan and financing rates. If you need a loan or financing, do not accept the first offer you receive. Research various financial institutions and negotiate interest rates. Remember to compare the total effective cost of each option, which includes all loan costs. Negotiating interest rates is an important practice for those seeking loans or financing. By negotiating, it is possible to obtain more advantageous conditions and reduce loan costs. The first step is to research various financial institutions to get an idea of the rates practiced in the market. After that, it is time to contact the financial institution of your choice and negotiate the conditions. It is important to know that interest rates are not the only important information to consider. The total effective cost is important information for comparing loan options. It includes all loan costs, such as interest rates, taxes, insurance, and other fees. Therefore, it's important to compare the total effective cost of each option to choose the most advantageous one. To negotiate interest rates, it's important to demonstrate that you're a responsible and reliable customer. Present your income and payment capacity and show that you're interested in maintaining a good relationship with the financial institution. Negotiations may often involve the purchase of other financial products such as insurance and credit cards. Analyze whether these products are really useful for you and if the cost-benefit is advantageous. Finally, it's important to carefully read the contract before signing. Make sure that all negotiated conditions are included in the contract and that there are no abusive or illegal clauses. If in doubt, don't hesitate to ask a specialized professional or the financial institution itself. Secondly, invest in financial knowledge. By understanding how investments and financial applications work, you can choose the most advantageous options for your financial profile. Invest in books, courses, and other sources of information to become a more prepared investor. Investing in financial knowledge is fundamental for those who want to succeed in managing personal finances. Financial education is one of the keys to better understanding the options available in the market and, consequently, making more informed decisions when investing. One way to invest in financial knowledge is through reading books on the subject. There are many works that can help you understand everything from the basics of economics and finance to more complex topics such as investment analysis and risk management. In addition, there are several online and in-person courses that offer classes on investments and personal finances. These courses can be a good option for those who want a more practical and interactive learning experience, with the possibility of asking questions and receiving guidance from specialized professionals. Another option is to participate in investment forums and communities where you can exchange information and experiences with other people who are investing or planning to invest. In summary, investing in financial knowledge is an important strategy for those who want to have a healthier financial life and achieve their goals more efficiently. Understanding the available investment options and the risks involved can help make more informed and profitable decisions. Third and lastly, avoid high-interest debt. Credit cards and overdrafts can be major villains in your personal finances. Avoid using them whenever possible, and if you need to, pay the full amount of your credit card bill and get out of overdraft as soon as possible. In addition, avoid taking on debts with high interest rates such as consignment loans, loans with financial companies, or loans secured by property or vehicles. These types of loans can have very high interest rates, which can seriously affect your budget. If you need to borrow money, consider options with lower interest rates, such as personal loans from traditional banks or credit unions. But remember to negotiate interest rates and always evaluate the total effective cost before making any decision. In conclusion, interest rates have a major impact on our financial life, affecting everything from our investment options to our daily use of credit cards and overdrafts. It is important to always be aware of these rates and seek the best options for our financial profile, avoiding high-interest debt and investing in financial knowledge. If you enjoyed the video and want to share your experience with interest rates or have questions about the subject, leave your comment below. And don't forget to subscribe to the channel, like and share the video to help more people take care of their financial lives.